All right, how's it going, guys? My name is Caleb Kioh, founder of WalletGyde, and today we are talking about the banking basics with Ben. Ben, glad to be here, or glad to have you here.
Yeah, thank you so much for having me on. I've been looking forward to this for a while.
Absolutely, absolutely. If anything, too, long time no see, right? Because
Right, yeah.
we just, by the way, a little bit of background. Bank is correct me if I'm wrong, the regional. Is it the regional manager?
I'm the market president for Alpine Bank in Northern Colorado.
Market president from Alpine Bank. So we're not messing around here, right?
Yeah.
So we got the guy to talk about banking basics, right, for consumers and entrepreneurs and all the above. So get ready. This is going to be an exciting topic. As you guys know, I'm super passionate and excited about personal finance, banking, all things money. And if there's anything or one thing that we don't talk much about, even outside of money, is like banking products, right? And by the way, banking products, people don't realize how integral these products are and how they actually dictate consumer spending and basically our life, right? Our livelihood, our lifestyle. So before we dive deep into, educating people about banking products and understanding about different criterias when it comes to banking that you guys look for with consumers, let's start from square one. Why are you even in the banking industry? How did it happen?
Yeah, so I have probably a different story than most.
Okay.
I'm not your traditional banking background, finance major. I attended college and I got a dual degree in speech and journalism. My intent was to go into public relations. And as I started to explore that late in my college career, I realized that maybe that was an industry that I didn't really want to pursue to the extent that I thought I did when I started that degree. And I was at a kind of a loss for where to go. I'm a Colorado kid by nature, so I decided I would go be a ski bum in Lake Tahoe.
Sounds pretty Coloradan.
Yeah. Moved out to Lake Tahoe to ski, and I ended up getting a job at a bank out there to pay the bills and to pay the rent while I was out there. And man, it ignited a passion in me. Once I got into the industry, really, really kind of was drawn to it, loved being able to help people achieve their financial goals and help some of their dreams come true. Could really see a path to where banking could become a career for me. Moved back to Colorado. Alpine Bank had an amazing officer trainee program that kind of took you through everything, back office, really ground floor up. And I applied for that program. I was accepted to it, and I just celebrated my 20th anniversary with Alpine Bank. So I've been with them for 20 years. I've kind of worked my way through that program to the position that I'm in now, and it's been an amazing career. I call it my accidental career, but I couldn't imagine doing anything else now.
Really? So if it wasn't for banking, what would you have been doing? Would you still be in a mountain ski resort somewhere just chilling? Or
probably. I mean, my dad's a contractor, so I'd probably be building houses or doing something like that. I don't know. I really can't imagine doing anything else. It's brought me really great joy. It's brought me great fulfillment. I've made some of the best relationships in my life through this career, and I'm just grateful to have it.
For sure. Well, let's dive a little deeper because I'm really big in like understanding people's like stories, right? And if there's anything about money, it's all about money stories, right? And so we all have a reason why wanting to especially go into the world of finance and business and banking, why we want to do that, right? So I understand you started telling us about your journey. Let's dive deeper into what was that switch? What did you see within the banking world that made you say, hey, I would give up skiing to want to do this?
Yeah, I think it was just the opportunity to connect with people on a deeper level, to understand their business, to understand their financial goals, to help them build generational wealth for their families, to really be a part of something sometimes from the ground up, sometimes midlife of their business, but to be a part of something that really helped the community as a whole. And I think that's the part that people miss with banking.
Sure.
Is that banking really plays an integral part in our community's health. Banks invest back into their communities. Small business, as you know, is really the engine that drives a community in terms of employment, in terms of business health and community health. So I really got to be an integral part of that,
right.
And really help a wide variety of people in those endeavors. And I think that's the thing that captivated me the most, was being a part of somebody's story that way, being somebody that people could trust to come to for financial advice, for loans, for help, and to be part of their story and part of the community story. And that's really what the hook was, I think.
I see.
That kept me around.
No, because you brought up a good point too. You mentioned a word, trust, right? And when it comes to banking and trust, sometimes that trust is a little, it's a little iffy for certain people, and certain, people have perspectives about banks and things of that nature. So walk us through, to your point, you mentioned, hey, look, there are some banks that do very good things into the community and things of that nature, but then there are other banks or people have perspectives about, hey, banks perhaps may not be as, good as we think they are. So first of all, I guess, why do you think these narratives exist? Having a background in finance, I did also do some research or have, I remember the different stock market crashes and things of that nature with our financial institutions that perhaps could, I should say, have people think certain ways about financial institutions and banks. But I'm more so interested in, what is your take, and what are the different perspectives?
Yeah, so I think overall, I think people probably have a generally neutral to positive outlook on banks. Everyone uses a bank.
Right.
There's probably going to be some negative perceptions out there with banks. I mean, the Great Recession, obviously, when you go through mass foreclosures and things like that, the bank is really kind of at the forefront of that. And so, there can be impressions there, and probably rightly so.
Sure.
There's been things in the history of banking that have probably led to that as well. But I think what amazes me most, Caleb, is that probably more people than I would care to admit don't do a lot of research into who they bank with.
Sure.
They maybe get an account when they're young, and they stick with that account, and it's kind of money in, money out, and it works, and they don't think a whole lot about it. And I think that's one thing that I would hope that people started to do, is really research, where's my money going?
Sure.
How is my bank handling my deposits? Are they supporting the local community? Are they lending money back into the local community? Is this going outside of my community, and what does that look like? How philanthropic is my bank? Are they helping to support initiatives in the community? And really, what I tell people, this is one of my favorite things to do. Ask somebody who their banker is. And maybe they'll say who their bank is. And then I say, no, that's your bank. Who's your banker? And not a lot of people have a banker. I think we think of that as like an archaic term, right? You had a banker in the 50s or the 60s. It's so important for people to have a banker, not a bank. That's where you create that trusted relationship, is with your banker.
Sure.
And those people who have a banker, who can identify a banker in their life, I think are already set up for more success, because they have somebody that they can go bounce ideas off of. They have that trusted relationship. And I think that's what people are missing. A lot of people have a bank. Not many people have a banker anymore.
No, and that's actually a really great point too, for sure. Now, could it be that the perception of having a banker is like, oh, you have to have a lot of money and this and that nature to have a banker? So walk us through, like, your experience of, like, because you just mentioned the difference between a bank and a banker. So you're talking about, hey, you don't even need a lot of money to even just know your local banker and things of that nature. Absolutely. Right? So walk us through, breaking down that maybe perhaps misconception about having a lot of money to know bankers.
Yeah, it's a really good point.
Yeah.
I think you really onto something there where people think, having a banker is like having a private banker. And there's definitely institutions out there with wealth advisors and private bankers that are going to handle high net worth clients. And that banking might look a little bit different than my banking or your banking or a lot of people's banking. And so there is probably that misconception, but everybody should have a banker. Everybody has access to a banker. At least at Alpine Bank, everybody has access to a banker. And maybe if you're intimidated on going into the branch, start a relationship with your teller. Start a relationship with your personal banking representative who's opening your account. Those people can be great relationships to have at a bank too. At least start the trusted relationship there. But there's really no level. I love talking to our clients on a daily basis. My office door is always open. I'm a market president, but I'll talk to anybody and everybody. Love to sit down, hear people's financial goals, help them drive for results. Here's a big difference, right?
Sure.
Somebody can walk into a bank and be told no and walk out of there with not a whole lot of more information. Let's say they wanted a loan. They can walk out of the bank with the answer no, feel dejected, feel maybe lesser than, and not really understand why. And that's probably a really transactional interaction. If you have a banker, somebody will explain why it can't happen at this point in time. They'll give you resources and help and direction on how you can make that happen in the future. So maybe it's a credit issue, and we can say, hey, here's some ways that you could improve your credit. Here's a couple people who provide credit coaching that you could go to for help with that. Let's try again in a little bit instead of just no. And so that's maybe the biggest difference. You can walk out of a bank feeling really dejected and lesser than, or you can come out of there with a good plan and some good things to work towards to try to make it happen in the future.
No, that's a great point. Do you feel like, more banks, should, or maybe perhaps that's why people are so intimidated, because you mentioned that, perhaps going to a bank because they just don't know so much, or they don't know much at all about what it takes to either get approved for a loan or this or that or the other. So do you feel like it's an education or a lack of education problem?
I think it's probably twofold, right? So one, it's a vulnerable position to be in. When you need to borrow money from somebody, you're putting out there what you have to somebody else and maybe what you don't have. That's always vulnerable. So I think that heightens the emotion of it anyways. It can increase the intimidation.
Sure.
But then let's be honest, some of the trends in banking have moved certain loan requests to a truncated process where you don't even talk to a person. So now you're just entering information onto an online portal and it's spitting back a decision. And so, sometimes there's no answers. It's just an approved or denied type of situation. And so there's not a lot of context there.
Sure.
And that's, again, why it's important to have those relationships. Even if you have a truncated process at a bank, but you have a relationship, you can always go into somebody and say, hey, I went through the truncated process. It returned a denial. What happened? Somebody can dig into that and let you know.
So no, and that's a great point. So let's dive deeper into now the banking products and the value proposition, if we want to say, between or for banks and bankers. Why should a consumer or a regular individual want to have a personal banker, and what sort of banking products can they benefit, from?
Yeah, I mean, so, just having a bank and a banker in general is going to really increase the safety of your money and your finances. Sure. Hopefully help protect you from fraud, from loss, and a lot of other different types of things. Sure. It's also a lot cheaper in a lot of ways. If you're somebody who doesn't have a bank account and you're going to payday loan places and check cashing institutions, that's an expensive model to run your personal finances on versus direct deposit and running through just general banking products. So, you really start at the base of checking account, savings account, consumer loan products, auto loans, home loans, those different types of things. And then you can scale that as high as you want into, wealth management and wealth building, commercial loans, small business loans, anything on that side to grow with you as your life evolves and
Sure.
as you go into those different stages. But the biggest thing is, one, I would say safety, protection. Your money is insured if you're at an FDIC insured bank, which is really important. It's cheaper. Every bank will give you their schedule of fees, so it's really transparent of what the services cost at your bank. And if you look at that schedule of fees, you can see what it costs. You can compare banks apples to apples based on those schedule of fees, and so you don't really have to get roped into high-cost products. Most banks now offer free checking, and sometimes that's tied to if you have direct deposit or whatever else. But I think it's just really important that everybody starts with that base relationship.
Yeah, no, definitely understanding, the relationships between checking accounts, saving accounts, CDs, all the different types, car loans, mortgages, right? As consumers, I mean, these are products that we need, right, to have a livelihood, right? And so, to your point, understanding, first of all, what bank to use to get these products, making sure making sure that bank has perhaps your best interest in mind, and making sure the products that you have in there has, it's competitive in the market. Like, you're not getting, too much fees and things of that nature. So these all are checkpoints and things that it does look like it's super important when it comes to finding or choosing a bank. Maybe I was just brainstorming on some stuff there, but if you don't mind actually walking the audience through what are these kind of maybe mental checklists that you should look for when you are trying to find a bank.
Yeah, I think it's really value alignment in a lot of ways.
Sure.
So we kind of talked about how does your bank operate in your community, and walk into a bank and see how you're greeted. I would start there.
Sure.
Somebody saying hi to you, is somebody trying to help you,
Yeah.
or are you just kind of wandering around the lobby looking for somebody to help you? That's maybe a pretty good indication right there of how that relationship's going to go.
I've walked in some of those and I'm like, oh my God, I need to get out of here.
So, start there, and that'll tell you a lot. Your banker should be asking you a lot of questions when you sit down to open an account. And it shouldn't be, which one of these products do you want? And you point to it on the paper and I'll open it for you and I'll do it with a smile on my face. If one of my team members did that, I would consider that a failed transaction.
Really?
The people in my lobby will ask you questions. Caleb, how are you going to use this account? How do you deposit money?
Yes.
How do you spend money? Do you spend on a debit card? Do you spend cash? Are you using a credit card and paying that off at the end of your statement for points? What does banking look like for you? And then once we know what banking look like for you, what's going to be successful for you, we'll then recommend a product to you. Hey, based on how you use your personal banking account, I think this is the best fit for you. That's going to be a lot different than just walking in somewhere or opening it online, hoping you got the right thing. That's, I think, where people are going to get into products that maybe are a little bit more fee-driven because they don't know.
Yeah.
So in my opinion, you should be getting asked a lot of questions. And sometimes you don't think so because you're just there to open a checking account.
Right.
But this is dealing with your personal finances. I'm going to ask you questions about your personal finances.
Right.
I'm going to ask you, Caleb, how much money do you keep in your checking account on a monthly basis? What do you think your average amount is?
Right.
I might have an interest-bearing account where you can earn a little bit of interest, but you have to keep a minimum balance. And if you fall below that minimum balance, you're going to get charged a higher fee. If you're not going to keep that minimum balance, I don't want to put you in that product because it's not going to make sense for you.
Yeah.
That's the difference.
That
and
education piece.
Education piece.
Yeah.
Somebody who's asking you questions, who's invested from day one in making sure that you're getting the proper products into your banking suite that are going to move you forward. And guess what? Those products change over time. So as you start to mature in your work life and maybe you're earning more money, maybe there's a better product at that point in time for you. And if you have somebody good, they're going to help migrate you through that product life cycle so you can have the best possible banking suite that's there.
Man. you're making me want to. I'm wondering to myself, why don't I have an Alpine Bank account already? Like,
we can fix that.
Yes. You guys have a downtown location, right?
We do, yeah.
Okay, well, good to know. All right, you guys heard that, right? No, this is so true, because I don't believe I get asked all these questions at my bank, but nevertheless. So let's talk about you guys' role with entrepreneurs. I know we actually excitingly shared a workshop together recently this year, and we talked about entrepreneurship and banking and things of that nature. So let's kind of dive into that a little bit more. Do you guys have a unique approach when it comes to serving entrepreneurs and any other banks? I'm interested to kind of learn more about you guys' approach.
Yeah, I wouldn't say we necessarily have a unique approach to that. I mean, it's definitely part of our community. It's something that we want to support, and I think you probably see that there's a lot of different options that are going to be similar there. So, when you're really talking about entrepreneurs, you can start at the basic business checking accounts, and I think most people are going to have very similar products there.
Sure.
The hardest part when you talk about banking entrepreneurs is generally that startup capital. And that's where a lot of our entrepreneurs come to us to say, I have a great idea, I need to finance it. And that's where probably things get the trickiest in that cycle, is kind of providing that startup capital and really looking at things from that sense. So a lot of us are going to have very similar products in terms of, working with the SBA and other organizations like that to see if we can help with some of those things. But in terms of just a unique product for entrepreneurs, we don't really have anything that would stand out among our competitors that we're doing differently in that space.
Okay. But when it comes to startups, I would imagine you guys are looking for more generally with banking, understanding how it works, is more tangible products, having a pretty good runway, having some operational, activities going on the P&L, having some, profits. I guess walk me through. I don't know if you have any sort of. I believe you mentioned this in the workshop as well, in terms of, is there a particular revenue rate or a particular, what sort of criterias do you guys look for entrepreneurs?
No, it's good. It's going to be very similar to every loan that we look at, right? We're gonna look at what's your capacity as a business to pay the debt back. So obviously that can come from existing revenue streams and historical income that the business is producing. We're going to look at projections. What's your projected revenue and net income for the future to pay us back that way? We're going to look at your personal credit. Most of those things are going to be what we would call recourse versus non-recourse, meaning you would provide a personal guarantee on the loan to where if the business defaults on the debt, we would look to the individual who signed the guarantee for repayment.
Sure.
So what does that look like from a personal standpoint? Character, capital, how much liquidity do you have? Have you invested everything you have in your business, or do you have some liquidity set aside to help carry you through some of the slow periods? So all of that we're going to look at, and that's really the hardest part when it comes to startups, is that sometimes there is no historical revenue, so you're only looking at projections.
And do you guys invest in those sort of startups? I know generally banks don't.
Yeah, it's a case-by-case basis, right? A lot of it would rely on secondary sources of repayment, and if those are strong, there could be a case for that.
Okay.
But here's where it gets so critical, Caleb. This is where we can help. And I know when we were on the panel together, one thing that the entire panel talked about was putting together kind of your team of people.
Yes.
Right? And having a really good team of people behind you, really having that thought out.
Yep.
And this is where it becomes critical, because we also have a lot of community resources that help startups. There's incubators and accelerators, and there's revolving loan funds, and there's Colorado Enterprise Fund and the Small Business Administration. There's all of these different things that we can point you to to really help maybe get that going. And one of the things that I think kills entrepreneurs and startups is misfinancing their company from the start.
Yeah.
And, you have to love the entrepreneurial spirit,
Sure.
because those folks don't hear no. They have an idea. They are passionate about
Lord
it,
have
and
mercy.
they are moving forward. And I love
Yep,
that. But sometimes that can lead to financing a business on a credit card that can really get you into trouble. And so I think it's sitting down, even saying, hey, you might not be bankable now, but let's help you with the resources that I can help introduce you to.
Sure.
And let's see what we can do to help you get started. I love that, because if I'm creating that relationship with you at the start, even though you're not maybe bankable, and I would use that word in quotes, right?
Right.
Maybe I can't lend you money for your startup now.
Yeah.
But if I can help introduce you to the people who can, if I can help get you started and create that relationship, then when you do fit into traditional bank products, we already have that relationship, and we can move you right into that.
Yeah. No, that's so important, and I like the fact you brought up building a team. I remember, shout out to Jen Ewan. She was the one that also, matter of fact, I think that's one of her core focuses that she teaches on, building that team. And so she was on there on the workshop with us on the panel. So shout out to Jen for that. It's so important. I remember when I was, super early stage, looking to build WalletGyde, and I basically, to your point, I had to map out like, okay, what does the whole ecosystem look like? To your point, like, what are different incubators that I can go through, different resources I can plug into, whether it's even the SBDC. A lot of people don't realize in Denver they have the SBDC, they have a program called Lead and Edge, which we were a part of. So we went through Lead and Edge to learn about, startup fundings, learn about P&Ls, learn about marketing, learn about the different areas of your business. And then while you're going there, making sure you have your banker, making sure you have your this or your tax person, so building that solid team is absolutely super important. And I, definitely you have to strive to definitely get that team going. Now, would you say, I know we're talking about entrepreneurship. Actually, before I even ask this question, I'm curious to know your thoughts on, do you also like maybe recommend or suggest, when you're raising capital as a startup company, having a combination of, let's say, equity and debt? Or do you guys work with companies that have that combination? Or what are your perspectives when it comes to like different financing options?
Yeah, it's really a structural question. So I think you would probably look to your accountant or somebody in that space for how you really wanted to structure it. I think we see a lot of initial startups have to look to that equity because they really can't quite get that debt yet. So, they're raising capital and kind of getting their start that way. And so we generally see it as just part of our businesses. But that's where I think when you have an accountant, when you're really talking to them, what does that look like? Yeah. How does that look for my particular company? These are the people that would like to invest, and how does that dilute my own ownership? How does that dilute my partner's ownership? And how do we really navigate that? So again, kind of back to that team, it'd really say, ask an accountant, ask somebody in that space. What does that look like, and what's the best structure to do that out of?
Yeah. No, great point. Right back to the importance of having a team. Now, let's also talk about, because, of course, with Alpine Bank, you guys service not just entrepreneurs, also regular consumers. Let's talk about the criteria that you guys look for with them. I know we slightly touched on that. Would you say is any different from entrepreneurs? And let's kind of dive deeper into the criteria and what qualifies them.
So most of the consumer products, right, are going to have minimum credit scores, debt to income levels that banks really look to. Loan to value caps on the different products that we have, whether it be for vehicles or a home equity line of credit, a home equity loan, a a conventional mortgage.
Sure.
Things in the consumer world are a little bit more spelled out because there's certain caps that we kind of put on things and certain guidelines that we have to hit. So, those are pretty well established in most of your banks, and you have somebody that walks you through that. The commercial side obviously differs a little bit because there's less caps and hard rules on some of that stuff, so that can look a little bit different. But
no, and these financial ratios, right, so to speak. For me, I remember when I was early stage in the personal finance space, and I was like, oh my goodness, like that was when actually that's probably one of the big drivers of starting WalletGyde, when I started realizing the importance of understanding my P&L, right? Understanding my cash flow, understanding my budget, but not just like budget in general, understanding like as I make income and as I spend income, what that difference is, and that debt to income that you're mentioning, or the savings ratios that you're mentioning, or these different ratios. I started understanding the importance of how these ratios factor in to when you're looking for financial services, right? And I realized a lot of people aren't aware of that, right? And matter of fact, that's why we, with WalletGyde, there's two main features that we've built out. One is called Income Summary, which does a good job of breaking down your income versus your expense. And then not only can you see your cash flow, but what we focus on is also detailing their financial ratios based off of that cash flow, right? And then what's really cool is then based off of those ratios, they can take that information, present it to a bank or a financial institution, whatnot, whenever they're looking to acquire some financial services. So being able to have insights about your financial data in that way is just so important, right? And although it seems like banks do look for those things, we were talking about this earlier, it does seem like, unfortunately, some banks don't do enough education around that they, hey, this is what we look for. So what's your take, and maybe if you want to kind of highlight how Alpine Bank goes into educating their clients about these key ratios that they look for?
Yeah, that's really where we sit down with our folks that are looking to, let's say get a car loan, and we really talk about, what is debt to income and what is that ratio? And a lot of people, you hear the number, but you don't really understand, or maybe you don't understand why that number is set where it is, right? So why is it 42%? Why is it 48%?
So true.
What happens there? And sometimes those numbers might seem low to people until you really say like, well, yeah, but we have to account for your taxes and your general living expenses. So, that's kind of where we set that to feel comfortable. So we will explain that to them. I think that's the biggest piece where if you're not able to qualify for a loan, we can really look and say, hey, in 6 months, it looks like you're going to have this car loan paid off. If the car loan was taken out of there, the debt to income works for this. So maybe we can't do it right now, but maybe we can relook at this in 6 months when that car loan is paid off. If there's no other debt that gets added on, then you're going to be okay. So let's reapply in 6 months. Or maybe it's, hey, your credit score is a little bit too low, and I don't really see a whole lot of derogatory information on your credit. It just looks like every credit card you have is near the limit, and that's impacting your score. So let's work on paying down some of those limits on your credit card, see if we can get some score improvement.
And would you say that's like some of the value propositions of a personal banker, them walking the client through that journey?
Yeah, I think so, because most people are just going to hear no. They don't understand why. They might not understand what it means. Bankers are historically bad about just throwing alphabet soup out there, right? we have like acronyms for everything: LTV, DTI, DSCR. We have all these things that we understand that language, but not everybody does. And so, if somebody just hears that their LTV is too high, they don't maybe know what that is. Maybe they're embarrassed to ask.
Right.
So having somebody that says, hey, your LTV is too high, that's your loan to value ratio. You need to come up with some more down payment to make this work, or we have to lower the loan amount. If it's a line of credit or something like that. So, those things I think are just critically important. I love that you bring up financial education because it's something that I think is just lacking in general.
Sure.
And it'll be interesting to see kind of how that works. I don't know if you're familiar with a House bill that's making its way through right now that would mandate financial literacy classes for high school graduates.
I mean,
that's going to be great if we can figure that out. But really, as an industry, as a banking industry, we can't rely on that.
Sure.
We have to figure out how do we get more involved with our communities to provide some of this education, because it's not just high school kids, Caleb. It's grown adults. It's people who have never had it. It's people in our minority communities that come from maybe even more distrust for the banking system. As a bank, I think it's really important to figure out how are we reaching out to our communities? How are we providing financial education to folks in these areas? And it's something we need to do as an industry. It's something that can get better.
I was about to ask, do you guys do workshops and host workshops?
Yeah, I mean, we definitely do. It's really good timing. Northern Colorado started the first financial sector partnership in the state as a region, which brings people across Northern Colorado together in that finance profession. So we're talking people from banks, credit unions, accountants, insurance, financial advisors, all across the spectrum. And we actually have a subcommittee for financial education, and this thing just started. I'm really excited about it. But how do we do better? How do we get into the schools? Even if this House bill passes, even if 25-1192 passes, how do we get involved as an industry to get in there and help with some of that curriculum?
Yeah, maybe it's working with companies like WalletGyde, that is really focused on financial workshops, financial education, being in the community. So no, I think it's exciting to see that we're actually. It's funny, we're asking the questions how we do it, but we just finished doing a workshop, where we hosted an event and people came, right? So, and I think that is how we do it. We collaborate. It's because to you, and I think you said it before, like at this point, like this is a societal issue. It's not even just a banking issue anymore. Financial illiteracy or financial literacy, it's not just banking. It's it's actually causing massive, as we know this, gaps, so there is a lot of gaps going on within our economic system because certain people know a lot about money and a big group of people don't know a lot about money, and what that's going to do is most definitely create economic and financial gaps. And to solve that is collaborating together. Whether it's within financial institutions and there's so many, even whether it's nonprofits and then of course fintech startup companies, working together, understanding, look, this is a problem for everyone at this point. How can we work together to solve it? And so that's why it's exciting, first of all, that we're even doing this podcast, right? But then even having the conversations of like, okay, what can we do more? How can we do more? And I think what's really exciting, I would say, for WalletGyde is, and I actually noticed this last year, it wasn't really on the roadmap because we were just a typical regular fintech startup company, right? And fintech startup companies, what they do is they build fintech products, just applications. And then we started hosting workshops. It just came out of nowhere at Denver Startup Week. That was the first one. And what I saw in that workshop was people truly interested about their personal finances, asking super important questions, seeing a room of other people that care about their finances. I mean, what did they say about one of the most taboo sort of topics, right, in America, money, I don't know, all you can list it out. So most people don't like to talk about money, right? But then when you get into a room, and especially when there's a huge problem, financial literacy problem, there's a need for sure.
Yeah.
Right. There's a big, even though people don't like talking about it, everybody knows, like, for the most part, there's a need to know about money, right? It's so integral in our lives. And so creating workshops and creating communities, which you even mentioned, it seems like Alpine Bank, they're super focused on that, which is nice. We noticed with WalletGyde, after we hosted that workshop, man, like, even though we're a fintech company, we want to be in the community.
Yeah.
Right? Because it creates that environment. It creates, just something else that I guess maybe apps by themselves can't do, that human touch, perhaps, that I think it's super important to help with the financial journey, right? Because it's a whole journey, right?
It is. And I mean, I've been to a workshop that you kind of help put on, and I've been on the panel, and you do a really good job of it. One thing I loved about that was the organic interaction we had from the people that attended.
Yeah.
People are asking really good questions, and I think when you hear somebody else ask questions, it normalizes for you. Mm-hmm. Not everybody knows these answers, and I'm going to ask my question. It's a safe space, and sure. I have industry quote unquote experts up there.
Right.
I wouldn't quote you guys that were on there. I'd just put the quotes of expert around me, but the rest of you guys were experts. But,
no, we were definitely all experts on there.
It was really a neat time to see the questions that came out, how interested people were in a variety of topics that I never would have thought would have surfaced in that workshop. So it's really, really cool what you're doing, and I think it's important.
So important, especially during our current times, right? As you mentioned. So actually, I'm glad you mentioned. It seems like there's a big push on an organizational level, and I would like to see how we can collaborate more on more workshops between WalletGyde and Alpine Bank. Especially within the communities and things of that nature. Now, let's, as we're getting closer to wrapping up, let's talk about navigating, because we talked about this earlier. As I mentioned, there is a lot of economic changes and, challenges and, let's say, even uncertainties, right? Interest rates, this, that, and the other. How are you guys first of all, how was Q1, and how are you guys managing all these uncertainties out there in the market?
Yeah, I mean, Q1, the market felt really good. There's a lot of activity out there, but there's also a lot of uncertainty.
Sure.
And I think that uncertainty is going to continue a little bit. And so this is where it's just really important for people. If you look at something like WalletGyde, man, really understand your spending. And with the current state of things, potential unemployment, potential recessions and things like that, probably more important now than ever to have a good savings and a good nest egg and, several months of expenses in the bank to really carry you through if something happens. And I think it's interesting, if you look at your spending on a broken down basis, like something like WalletGyde could provide.
Sure.
Sometimes it's shocking to see where the money is really going out. And when you look at it as an aggregate, you think, there's no place I can save.
Yes.
There's no place I can save. I'm already running a tight budget.
Yep.
And then you look and you're like, how much did I spend on Uber Eats? How much did I eat out that much?
Yes.
Holy cow. I can really cut back in some areas.
Yeah.
Until you see it,
yeah,
it's really hard to know where some of those cutbacks can come.
Yeah.
And I think that's what's awesome about products like yours is that you're giving consumers really easy access to really break down their spending to set some realistic goals for themselves and a tool to manage that. It's not the old school ledger anymore where you have to kind of write it all down and see where it goes, or comb through 3 or 4 pages of bank statements.
Sure.
You have a real-time guide to help you, and I think that's going to be really important for the consumer going forward.
Absolutely.
But like we talked about on the panel, businesses need to see themselves on the same budgetary restrictions and budgetary diets that consumers do. Businesses need to be really aware of how much capital they have and how their revenue can change in downtimes, and what happens if the consumer's budget changes and how does that impact their business.
Sure.
Businesses need a budget, and
true.
businesses need to spend on a budget as well. And so I think
true.
when we look at these uncertain times, that's really what we have to look at is, are you planning for different economic uncertainties? How much capital do you have either as a business or as a consumer to carry you through lean times if they come?
Man, I really like that. I was in another conversation before, and when you were talking, there was a term that came into my mind that I mentioned in that conversation. It's called personal economy, right? So, because I mean, you broke that down very beautifully in a sense of like, yes, with the uncertainty going on out there, within that uncertainty, it's more important now than ever to understand what's going on within your personal finance, within your personal economy. And what I actually started, and I'm sure I didn't coin this term, but what I started realizing are the components of your personal economy is understanding, to your point, first, where you stand with your money. What's your inflows? What's your outflows? What's your income? What's your expense? What's your leftover? Right? That's your essentially that's your P&L statement for a consumer, right? So what does your P&L statement look like? What does your net worth look like? What's your assets? What's your debts? What's your, net worth, right? So those two, and now we're getting, of course, super financial nerdy here, but though understanding the correlation between your income statements and your balance sheets, not just as a business, to your point, but also as a consumer. And now, of course, maybe you don't need to get this granular. My background's in finance, and I know you and I, we can, number crunching is something we perhaps could like to look at. But at the same time, and that's why WalletGyde helps simplifies a lot of this conversation here, but understanding the relationship between I would say, statement that helps measure your income versus your expenses, and the statement that helps measure your assets versus your debts, and how they correlate with each other is so important to understanding your personal economy. Because regardless if there's uncertainty going on out there in the market, if you can look at your P&L, your income statement, and your balance sheet, and it's, your cash flow is going up, you have, to your point, you mentioned your emergency savings is being built. Your investments is looking solid. Your assets are looking great. Your debts are going down, and there's still uncertainty in the market. You're like, I'm good. I mean, there's uncertainty. Yes, inflation. Yes, there's this. But you look at your setup. You're like, look, I'm solid. And I think that for me was that big aha. I was like, look, it's so important that consumers understand where they stand. Now, another thing that I've also realized is, by the way, all of this is not easy to understand. Even as a finance person, it is not easy to look at your numbers. Sometimes you're like, oh my God, I'd rather be doing something else than to just sit there. It could be not only boring, very boring, but it can also have a lot of emotional connotation to it, trauma. And there's a book called The Psychology of Money written by Morgan Housel. And he just talks about, we all have a relationship with money, whether consciously or unconsciously, that we had when we were kids. And so even maybe sitting down and trying to look at your money, it can, certain people I've heard, it can make them sweat. It can make them like, there's all these emotional, most likely negative emotional things that come up when they start looking at money. So understandably, because we have that, it's not easy to go through your budget. And that's why, having having a personal, building that team is so important, right? Having a personal banker, having a financial coach, having financial tools like, whether it's WalletGyde or any other just resources out there that helps you go along this journey, because it is truly a journey, right?
It is, yeah. And so many things change. Yeah. I mean, we're living in Colorado right now. Talk to a lot of people about what happened to their insurance premiums in the last year, right? Yeah. And so really important to make sure that you have a little bit of cushion built into your budget, because when your insurance renews and it goes up by 20%, that money has to come from somewhere. And so, yeah, I think the better that you can understand it, the easier life is going to be for you, the better you can contingency plan, the better you can goal set to know where you need to be. And I think it's okay, right? We all have goals, and we're all in different stages of progression towards those goals. But you really have to know where you're at and where you're starting and where you want to get to. And it's uncomfortable, but I think it's important that people dive in and at least get a good baseline and continue to track it and check in on it and strive towards that. No,
I like it. What would you say is like, then, with that being said, like your closing thoughts on, just everything here that we kind of just mapped out, and specifically when it comes to banking basics?
Start with a relationship.
Yeah.
Just have a relationship with your bank that's more than you deposit money in and use a debit card or a credit card to take it out. Have somebody that you can go talk to bounce ideas and questions off of. Have somebody that can grow with you as you're growing through your different stages of your financial life.
Sure.
We really enjoy helping people along that journey. And it might start with a simple checking and savings account, and it might end up with a 30-door rental portfolio by the end of your life. And we want to go on that journey with you. And we can advise you on a lot of different things. We have, a lot of products that can help. And then, fintech pairs so nicely with a lot of the stuff that we're doing as well. But I think my closing thought would be, look at your current banking relationship and really ask yourself if it's serving you. Do you have a banker, or do you just have a bank? And if you just have a bank, go find a banker.
Love it. I would ask one more. Where do you see the future of banking going?
Yeah, it's a really good question. I think I think my biggest fear as a community banker is that the future of banking is really going to be tied up in fintech, and that we're going to see a lot of our deposits leave our community. And I don't think most people understand the true implications of that, and what happens when deposits leave your local community, and what happens when banks can't reinvest back into the local community. And I think as a community banker, that's my biggest fear, is that the personal aspect of the business is diminishing. There's really cool products out there. They're shiny and they're flashy, and they work really, really well. But what happens when we don't have local community banks? And I think people don't fully understand that. The true impact downstream from that. Sure.
Well, I would add on to that. Then it sounds like we have a mission to do here with collaborating with banks like Alpine Bank to make sure we create a nice community, a financial community, to educate people about the importance of community banking.
I agree.
Awesome.
Yeah.
Well, Ben, this has been a pleasure, and I'm looking forward to continuing to collab.
Yeah, thank you so much for having me on. It's always fun to chop it up with you about finances, and good to see you again.
Yeah, for sure. Awesome.